Have you ever wondered what NIO has been up to lately? Well, NIO stock has taken a wild ride, dropping a staggering 50% in just 3 months. That's no small dip as NIO's stock price is currently hovering around $7. Now, could this be your golden ticket to potential riches? In this video, we're diving deep into NIO, unpacking the reasons behind the plunge, exploring investor sentiments, and analyzing the prospects of a rebound. Is NIO at $7 a hidden gem, or are there storm clouds on the horizon? If we zoom in on the electric vehicle market, it's evident that the sector is poised for substantial growth. According to recent industry reports, the demand for electric cars is expected to surge in the coming years. This surge is not just a trend, but a fundamental shift driven by a global push towards sustainability and a growing awareness of environmental concerns. In this landscape, NIO stands out with its proven manufacturing and sales capabilities. In the last quarter alone, NIO delivered over 23,000 vehicles, showcasing operational efficiency. While there was a slight drop compared to the previous year, the overall trend remains positive, with over 40,000 cars delivered in the final quarter of the previous year. What sets NIO apart is its premium positioning in the market. Unlike some competitors, NIO has positioned itself as a high-end brand. This positioning sets it apart and gives the company pricing power. Consumers are willing to pay a premium for NIO's electric vehicles, contributing to healthier profit margins. Moreover, NIO boasts a competitive edge through its innovative battery swapping technology. NIO addresses a significant pain point for EV owners in an industry where charging infrastructure remains a concern. The proprietary battery swapping system eliminates the need to find and use charging stations, offering a practical solution that enhances the overall user experience. Now, did you think NIO was cruising smoothly on the electric vehicle highway? Well, recent data paints a different picture. Sales have taken a hit, dropping in the most recent quarter. The lower profit margins echo the intensifying competition in the electric vehicle space. Tesla felt the squeeze, and now NIO is in the same race, grappling with the impact on its economic bottom line. The consistent losses are like a persistent cloud over NIO's financial performance. In the last quarter alone, the net loss ballooned to $835 million, making up nearly 70% of its revenues. Now, can NIO weather the storm and turn these losses around? The need for consistent revenue growth is glaring. It's not just about bouncing back. It's about proving that the business model is robust enough to thrive in the competitive electric vehicle market. Speaking of competition, it's fierce out there. The electric vehicle landscape is like a battleground, and NIO is in the thick of it. Rivals are vying for market share, and consumers have choices. Challenges include standing out in a crowded field and dealing with the evolving landscape of regulations, technological advancements, and shifting consumer preferences. Have you heard about NIO's recent shakeup? NIO dropped a bombshell with its announcement of layoffs, waving the efficiency and cost-cutting flag. While streamlining operations is common, the timing raises eyebrows. Efficiency or a sign of deeper financial struggles? Speculation is rife about NIO's financial health, with whispers of the company potentially going out of business. It's the elephant in the room, and investors are nervously eyeing the situation. But hold on, because co-founder Chin Li Hong steps into the spotlight, strongly denying any such doomsday scenario. The co-founder's assurance adds a layer of complexity to the unfolding narrative. It's also crucial to peek behind the curtain and uncover the major players holding the strings at NIO. CYVN Investments, with a hefty stake of 124.83 million shares, makes a significant mark on the shareholder landscape. Tencent Holdings follows suit with 124.11 million shares, contributing to the robust backing of NIO's endeavors. Bailey Gifford, not far behind, holds 114.90 million shares. BlackRock also holds 64 million shares in NIO. State Street, with a stake of 21.03 million shares, rounds out this ensemble of major shareholders. Their presence in the shareholder lineup resembles pillars supporting the NIO structure. Now, let's turn the pages to Q3. Institutional ownership undergoes a shift, revealing a decline of 15 filers compared to the prior quarter. The numbers speak volumes, from 478.90 million shares to 407.32 million shares. A dip in institutional interest prompts questions about the perceived trajectory of NIO's fortunes among these major players. Adding a layer to this financial drama is the put/call ratio, up from 1.2 at the end of Q3 to 0.9. This shift implies a bearish option stance, with 54.39 million puts against 45.41 million calls. But before we continue, we want to thank you for watching this far. But we're not done with the good news. NIO has been making waves, not just on the roads, but in the virtual world too. Online searches for NIO are skyrocketing, especially on Zax.com. This surge in popularity signifies a heightened interest from investors and enthusiasts alike, creating a digital buzz around the electric vehicle giant. NIO's stock performance over the past month reveals a 3.8% dip. It's a reality check, but let's put it in perspective. Compare that with the S&P 500 composite. Suddenly, it doesn't look so gloomy. In a market where fluctuations are the norm, NIO's minor setback doesn't stand out in a negative light. Earnings estimate revisions are the unsung heroes of the stock market. When analysts tweak their projections, it's not just number crunching. It's a signal that something significant is brewing. And now, drumroll for the Zacks rank number 2 for NIO. Analysts are giving NIO a vote of confidence, projecting positive outcomes that have propelled it into the buy zone. Moreover, NIO's earnings are under the spotlight. In the current quarter, analysts project a loss of 43 cents per share, marking a year-over-year change of minus 19.4%. The outlook for the current fiscal year doesn't paint a rosy picture either, with a consensus estimate of minus $1.79, indicating a change of negative 38.8% from the prior year. Looking ahead to the next fiscal year, the consensus earnings estimate of negative $1.26 suggests a change of positive 29.8% from what NIO reported a year ago. These figures lay out the financial landscape NIO is navigating. Shifting gears to sales estimates, the consensus for the current quarter stands at $2.63 billion, signifying a year-over-year change of positive 44%. Eyes are on the prize for the current and next fiscal years, with estimates of $8.46 billion and $13.55 billion, indicating positive 16.5% and positive 60.3% changes, respectively. These sales projections hint at potential revenue growth for NIO, a critical factor in its financial health. Now, let's dissect NIO's recent financial report card. In the last reported quarter, NIO recorded revenues of $1.21 billion, reflecting a year-over-year change of negative 21.3%. The EPS of negative 51 cents, compared to minus 25 cents a year ago, reveals a challenging financial landscape. Adding a twist, NIO fell short of the Zacks consensus estimate of $1.35 billion, with a revenue surprise of negative 10.71%. The EPS surprise was minus 41.67%. It's a mixed bag, with both positives and pitfalls. Zooming out, the valuation metrics come into play. No investment decision is complete without considering a stock's valuation. The Zacks Value Style Score, a grading system considering both traditional and unconventional metrics, assigns NIO a grade of C. This indicates that NIO is trading at par with its peers, giving investors a gauge to assess whether the stock is fairly valued, overvalued, or temporarily undervalued. So, could investing in NIO at $7 be the golden ticket to massive returns? Let's break it down. If one were to invest $10,000 in NIO at its current price of $7, it would require a monumental 100-fold increase in the stock value to hit the $1 million mark. While not impossible, it's a rarity in the stock market arena. For a more feasible route, a $25,000 investment would demand a 40-fold increase to reach the same seven-figure summit. Taking a detour to NIO's current market cap of $12.3 billion, the math gets interesting. A 40-fold increase would catapult it to a staggering $492 billion, a realm occupied by the giants of the business world. However, this growth narrative hinges on a crucial factor: profitability. NIO must navigate the road to profitability to fuel such exponential market cap expansion. The reality check comes with NIO's recent foray into an electric vehicle price war in China. In this battleground, profitability is a casualty, and NIO faces the challenge of maintaining healthy profit margins. The need for turning profitable becomes not just a financial milestone, but a prerequisite for sustained success. But NIO's dreams stretch beyond the Chinese borders, with a global expansion strategy in play. Launching in Norway and eyeing a European dealer network, NIO aims to tap into international markets. Yet, obstacles loom on the horizon, with challenges like unexpected sales performance and potential trade barriers threatening to pump the brakes on global aspirations. So, is NIO at $7 a potential millionaire maker? The numbers speak volumes, but the road ahead is paved with challenges and uncertainties. Will NIO navigate this intricate terrain and emerge as a stock market sensation? Join the conversation in the comments below, and while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.